Good afternoon, everyone. Good afternoon. Good to see you all. Welcome to the PivotBoss Trading Room for the monthly market outlook for December 2018. Today is Monday, December 3rd, the first trading day of the week and of the month. And we're heading into the last trading month here for the year. A lot to get to today. Again, thank you so much for joining me. Thanks for those recommendations on those stocks. We'll take a look at those. I have a list myself here, a lot of great opportunities in the market right now. We're at some critical junctures in the charts as well, so we'll discuss that. I'm going to look at the futures first and look at some of these higher time frames, just discuss what the market's kind of been up to here lately, the key levels to watch. And then I have several candidates here that I'll be sharing, both from a near-term swing perspective, 1 to 2 weeks out. Also some longer-term perspective candidates that could be months and months out, so kind of like active investing or position size type things. And then we also have a couple of short candidates as well, just in case. But we have quite a bit to get to, so I will go ahead and get started. Absolutely, this will be recorded and put up onto YouTube and on the website here later on this evening, so you should be seeing that sometime later on, and I'll make a note of that as well. I think I'll also send an email at some point here with that information as well, so everything will be recorded for you for later playback. And let's go ahead and get started. Number one, let's take a look at the ES. The ES has had quite the wild ride here over the last 2 months. This has been a very volatile couple of months here, and it follows a period here where everything was very, very quietly trending up until price could no longer hold above the recent highs here. And again, I always have to come back just to show everybody where we kind of started off at the beginning of the year, because that really gave us all the key levels we really needed for the rest of the year. And this is something we started the year on, and if this is your first time joining me, then I can catch you up really quickly. But anytime you see a major impulse sell-off the way we did here in the ES, where we found a high at the end of January and then sold off tremendously until we found that low, usually you snap back to the midpoint of that pattern. That's this line here. You have the top there, and you have the bottom here. Those three levels are the most important levels on the chart. And then you have the inside levels here, which are kind of the inner quarters. That's the upper 25 above the midpoint. This is the lower 25 right below the midpoint. And each of these levels have been so important. That's why when price was here in October, or heading into October, I was selling off most of my longs at this point and then looking for some short opportunities, because the idea was if we could no longer hold 28.78.5, which is the top of this line, then we would likely drop all the way back to the midpoint, 27.0375, with a shot to go even lower. And so that kind of started this entire drop back down inside the range. And now you can see once we've reached those targets, we've mostly traded above and below the midpoint of that larger range. And this is kind of where we traded before, where this was resistance here at around 2800, 2891.75, and that's kind of where we are now. That's resistance here. And in the lower edge down here is about 2600, 2620, and that has been support, and it's currently support. So right now we have a very clear trading range. Very, very clear lines, very clear trading range. And the other thing we were looking for here in the near term was perhaps a bounce back up toward the FOMC key level from November. So we always, these blue lines here, these are all the FOMC dates where the Fed releases their federal interest rate decision, raise rates, lower them, keep them the same, whatever the case may be. I mark the 1 o'clock open price Central Time, 2 o'clock open price Eastern. You mark the open right when the news is released, and that is your FOMC key level. And what you notice there is that on this key level here, which was November 8th, it was basically 28.10 and change, I believe. Or is it the lower one? I'll have to look. Either way, price sold off away from that level. And typically speaking, what I mentioned is you're going to see an initial impulse move away from that level. And then it's going to continue to go in that direction until you see rejection somewhere. Once you see rejection, you typically see price come all the way back to that level for a retest. And that's why recently here we had some longs that we were looking for a bounce back up, and we got that. It played out over the weekend here. Positive news out of the G20 with perhaps a handshake deal with China and the U.S. regarding the current ongoing trade war and tariffs, etc. Again, nothing concrete, nothing firm, so we got ourselves a little bit of a relief rally, but we're not out of the woods yet. So what I will be looking at here is how does the market respond tomorrow? Because today we close the day basically with a long-legged doji type of pattern with a shadow or a tail on both sides of the day's range, and then we close right here near the midpoint of the day. You also see right here very clear resistance. I've mentioned in the pre-market videos that 28.25 is the level to break. If it can get above 28.25, then perhaps we have as high as 29.40 to 29.50 above, right? That could be a very doable move because it's clear air. It's clear air from here to here, right? And so this is a very important zone, and it's very important tomorrow. If price fails to hold 28.75, for example, then perhaps we start to see a move back down like we did the last time we were up at these areas. You can see that last time it took out this low or took out this low and started down. Boom. So if we start to take out 27.75 and close below that level, we could be looking at a pullback of some magnitude, whether it comes down to here or whether it just retests 2700. We don't know. Maybe it comes just back to the midpoint of the previous month's range. We have to see. But overall, I think that we are in a spot here where we're kind of at you know, the zone where you're either about to see that move down or you're about to see at least an attempt to push through this zone. So we're right at the pivot where something will happen. And that's always very, very good. That's where the opportunity is. It's at the edges of the range, right? And so right here, we're sitting here at 2800, 2790 right at the moment. Again, what I will be looking at tomorrow is where do we close the day with regards to, in relation to today's midpoint. Today's midpoint is 2793.75. You can see it right here. Median price. 2793.75. It's basically the little yellow dot right here at the middle of the range. Between that high, that low, there's a yellow dot there. That is the midpoint. If we close above it tomorrow, we could be looking at a pretty solid rally ahead. If we close below it tomorrow, we may be filling the gap and dropping into the pivot range, but still not be out of the woods here in terms of, you know, going up. I mean, if this thing were to drop into the pivot range, we could still see a defense opportunity and a retest and perhaps a higher low. So not easy right now. I always say that after the trade comes and hits its targets, the next trade is always more difficult because now you have to be patient and let the market do its thing again. And so this move was what we were looking for to get back to the FOMC level. We hit it today. Now we have to be patient to see what the next move might be. Above 28.25 could be significant. So that's the ES here on a near-term perspective. Longer term, we always like to use this day, the monthly outlook, to look at longer-term ideas as well. I think longer term, this market still looks rather healthy overall. If you look at this from kind of the grander scheme of things, since the '09 lows here over the last 10 years, we've had a really good up move, right? That's basically the trend line. And this is the low everyone really wants to be tested. Let's get it done already, right? That's the low of the year. And you can see that after this tremendous rally we've seen, we've gone sideways this year. This is exactly what I mentioned could be the case after the first week of February. So after we saw that major sell-off on February 6th, I believe, which was a low, something like that, I mentioned at the time that this range is so big, that impulse move is so big, that it's likely going to contain prices the rest of the year. And so it's no, you know, again, it's just what happens in normal markets. So it's nothing out of the ordinary. It's trading the way it should. Now, the best spots to trade in this range are the edges. And if we continue in this uptrending market, that means we're going to at least have to come down here and test this edge at some point. And when we do, that may be the buy that sets off this thing for another major run higher over the next 1 to 2 years. So here's the deal. We're never too far away from an all-time high, but we're also not too far away from retesting this low. Got to be patient when things shake out as they're doing right now. I think that there's a good shot to have an end-of-year modest rally. Even if we pull back this early this week, it could be a short-term buy heading into the end of the year. In January, we could even see this thing hit new highs above these highs, and then do we see some sort of correction? And if so, is that the next buy back up? I think it would be. So I still think, and I still have longer term powder dry here for the longer term pullback opportunity right back at these levels. I think this is a great spot here for longer term movement, and that's why, again, with these market gyrations, it's giving some great undervalued situations for a lot of these stocks that had been high flyers, and now you're getting some great buys. Some have already stretched big time from the lows, like Boeing, for example, or Splunk, or some of these others that have really stretched off these lows just in the last 10 days or so. But there's still a correction that could be seen ahead, and if so, I think it would be a massive buying opportunity at this edge down here. So again, I still have powder dry for that event. Meanwhile, adding to things you like, building positions and things you like for longer term, but keeping the swing at the forefront as well, because the swing moves have been great. So that's kind of the longer term idea here. You can see if you just look at, for example, this developing profile right there, it looks almost like a D-shaped profile, right? It's like a D-shaped profile. That's your bell curve that you would normally like to see, and we're right here in the middle part of that range. So there's no real edge here, but as you get down to this lower edge, it's a lot better edge. As you get up here, it's a lot better selling opportunity back down. Eventually, I think after we find great balance, we continue higher. So I still think all systems are a go to the upside, barring some, significant event, but still really good. Now, if we tie that into, say, the NASDAQ, let's look at the NASDAQ really quickly. You'll see here the NASDAQ has been a little more bullish, right? Tech has been a little more bullish this year. This one had its big impulse move here, down, and that gave us the high, the low, and the midpoint. This was a great sell right there in the summer, back to the mid, right? This was a great buy back up. That was a nice buy here. That led us here. Retest back up. Again, over here, we were looking for signs that this thing would drop back down. So we were calling for selling pressure in October, and we positioned accordingly. The move became much bigger than I thought it could be, though. I did not think we'd end up dropping as much as we had, but we have. The initial drop was pretty big. Another gyration, and here we are at a cycle high. And again, I don't know if the market is ready to push through these highs just yet. We could see another rotation back down. You can see these upper highs right here. Today throwing off a shadow at the upper end of today's range, a nice little tail there. And it's going to be interesting to see, can the market close above today's midpoint of 70.77. That's the midpoint right there. If the market can close above that level tomorrow, I think we rally and retest a little higher and see what happens. Otherwise, any failure to get back above that zone would suggest that we pull back, and then 68.50 is going to be a high probability target perhaps in the next week. So those are some of the things I'll be looking at, but from a longer term perspective, this one still remains rather bullish. You can see here, right here, the longer term chart has the uptrend that's been well intact. You can see the LVN that comes into play right there. That's about 6,200. That's the zone that I've been waiting for as well to be tested, because that would clean out the lows, refresh those lows there, and then it'd be another opportunity to push it back higher within the bell-shaped curve of the current distribution. So this price distribution is mostly sideways for the most part. I mean, it's up to sideways to up, and you can see a great bell-shaped curve right there. That's what you want to see, and when you see that, the best idea is to be patient for the lows for the longer term things, but the intraday swings, or rather the near term swings, are very good right now to play. But from a longer term perspective, it's down here. And if you want to look at history for this, you don't have to go too far to get exactly what I'm talking about. That's the day we're talking about right there. You had a whole sideways year that came into play. What is that, 2014, 2015 maybe? That is 2015. You had a whole sideways year in 2015, just like we're having here. A little bit bigger in scale and everything, but same thing. And then early next year, price drops down, takes out the low, and then good night, you're not coming back to that low again. Are we going to see the same type of behavior here? Because if we end the year strong and even push higher to new highs in January, we could still drop down some point next year, and then that could be a long-term buy. 1, 2, 3 years later, this thing was way up off of those lows, never came back to that level. And again, that's not the only time we've seen that. If we scoot back even a little bit more, we saw it over here as well, where we had sideways for most of the year here. It takes out the low finally, and then never come back to it again. It's just what the markets do after sideways action. Taking out those lows, shakes out the last folks, allows others to buy it cheaper, and then the move starts. So I don't think we're out of the woods in terms of going down still, even though in the near term we still may head higher. Near term meaning, the beginning of the year, that type of thing. Because we could still head higher like we did last year. Look at this, 1, 2, 3, 4 weeks straight up to get everybody strong hard in there on the strong move up, got everybody long, and then bang, pulled the carpet out from under them. That could be something that happens again this time around. So just keep an eye on the lower edges of these ranges. I think that will be great long-term potential out of those. Let's take a look now. I wanted to take a look at crude oil for a moment because crude has been incredible in its decline. I mentioned before that I haven't seen a drop like this in a long time. But when you look at the higher time frame charts, this is one of the most mild drops we've seen when it comes to the larger severity drops. If we take a look at the weekly chart, and I want to go back way back. This is something we did last week in the trading room. Oops, wrong button. Let's go here. I'm going to go to, instead of 10, I'm going to go max available. Did it give me max available? There we go. This is crude oil, right? And if I go all the way back to, I don't even know, this takes me back to when I was in college. High school, look at this, all the way back here. So this is an incredible chart, right? You go from 10 to 20 bucks and then it skyrockets up to 147. Again, this move was just incredible when it rallied from 50 to 150 almost, 147. I've mentioned many times we were long all in here, so all those signals were bought. We were even long at the highs and got out the next day after the failed break. And then this sell-off happened. 147 to 30. 32, 33, something like that. This has only been 77 to 49s. It looks like it has been significant, but we've seen way worse, right? Even if you come back here, when price was trading the 112, 115 zone, eventually it broke down to the downside as well. This time it went from about 109 straight to 26 or so, right? Again, this pales in comparison to that move and this move, which tells me again there could still be more downside ahead if it really wanted to. U.S. is producing oil unlike at any time in its history. It's just incredible, the production we're seeing. And if you look at the chart again from a longer term perspective, the bottom of value is here, and that's still 38.99, so just call it 39s. Even the LVN starts to kind of come in right here. Those are recent lows. That's 42 to 39 is the next area of support. We haven't even hit value yet. which is 49 and change, I guess 48.48 on this view, we still haven't even hit value yet, much less gotten below value for a buying opportunity. So we could still get much, much lower before we bounce. And that could be somewhere between 35 and 40 if this thing really wanted to. So just some historical context to the current drop in crude oil. We've seen much worse. I've traded through much worse. This one has been significant. We have not seen selling pressure like that in a long time. And whenever it wants to turn it around, it could likely turn it around really, really nicely. The only time I thought that this might have a shot to bounce, and I was wrong, was right here. I thought, oh, this might be a time when we actually can bounce back up a little bit and retest the FOMC key level. The next day went right through, and it was a stop run day down, and we hit new lows again. This has not been a market that has been able to maintain any type of support. It just continues to drop through it. Today, though, on the G20 and other things, it popped, gap up, and held above today's midpoint. That's pretty impressive. Pretty impressive on the gap. The only thing is, look how bearish this move is. Look at the moving averages, how they're stacked and sloped to the downside. And additionally, look at where price is inside the first two moving averages. That's what I call the trigger zone, where you would sell it in most cases for another rotation lower. The other thing you'll notice is the pivot range. The pivot range is lower. It was up here last month. Now it's way down here this month. And so when it's lower, you tend to see a pullback into it, and then you drop out of it. Additionally, the other thing I notice is that this pivot range is very wide. So if you have my book, Secrets of a Pivot Boss, I talk about the width characteristics of these ranges. And typically speaking, when they're very wide like this, it usually suggests that you're about to go sideways and become range bound. So it would not surprise me if crude oil becomes range bound this month. We may see another drop down to new lows, and then it could pounce right back up, drop right back down, and blah, blah, blah. And by the end of the month, we've closed flat. And now we're heading into January with the potential to see some explosive movement one way or another. So this one has been extremely bearish, but it could still go down quite a bit more. Quite a bit more. The thing I'll be looking at tomorrow is how does price respond to 54s if it were to get up there, this pivot range, because if there's rejection there, it could start a path downward. And 49.17, I don't see how we get this close to it and not hit it. We got down to as low as 49.41, and you don't drop from 77s to come within just a handful of pennies of getting value without getting value. I just don't see it happening. Anything can happen, but it's just too odd. It's just to me, it's got to get this pink level. That's value. You don't drop from way over here not to test it just to go back in most cases. Again, anything can happen, but I'm thinking this is going to be a down move followed by perhaps some sideways, and then that could lead to fuel the next move. So this one's very interesting the way it's played out. I wouldn't be eager to buy it at all still, because again, there's a lot of production going on. Geopolitical events, Saudi Arabia, MBS, Khashoggi, the whole thing. Basically, this started dropping the day that everybody learned he was murdered. So I mean, that's still the case, and so it's very difficult to see this thing continuing higher. But I could see it at best going sideways after the next near-term drop. So this is going to be something to watch here. But a very good move up in crude. A very good bounce across energy. Heating oil was up 3.5%. That's as good a move as we've seen in a long time. We also had RB was up nearly 3% today. But the same characteristics right now. Failed new high, hitting the pivot range, which is lower value, in the trigger zone. This is typically very bearish for another short-term swing downward, typically speaking. The only thing I would hesitate on is just the fact that it's gone this far down. At some point, this trade is going to fail, right? It's got to fail at some point. We've already done way too many rotations. But at the same time, until it fails, you got to keep going with what's working. So energy still looking quite bearish. If I flip the switch to Bitcoin now, you can see we got the flush that we've been talking about for quite a while. Ever since price failed to hit my point here at 75.25 from this low at 6,000, that was the first time we hadn't hit a target that we had called out since the futures came online. When we initially dropped to this low last December, the idea was that we bounced back to the mid, we got it. And then when we dropped back to this low, the idea was we likely bounce back toward 12K. We got it. Over here, we had a long back to 9,000. We got it. And then over here, our long was to 8,500. The top was 8,500. And right here again, I mentioned that I think we can grab 75.25, and it didn't. And once that happened and it fell into this little range, that's when I mentioned that we might need to see a flush before this thing can go up. And I called out 4,400 as the next target down, and we got it. So the idea behind this is that when a market is very heavy and it's not going up, it's not going up, it's not going up, then the market has to flush weak hands before it can try to go back up. And so the flush will be fast and furious because everybody's long at the same spot. Everyone's long, everyone's long. The trade gets too full, and then everyone rushes out of the same exit at the same time. And that break right there opened up a move that hit our target within 5 days, 44. And then on this pullback and the retest of 44 from below, I mentioned that that retest right there could offer a selling opportunity back toward 2,100, which is the next major target down. So Bitcoin could still be headed much, much lower. You'll notice right here, 2,100 is the 100% expansion target from the larger key range. So this has been one that has been extremely bearish, and really ever since the futures came online, this one has been toast. The futures came online last year right here, almost a full year ago. And ever since then, it has been downtrending. It has been lower high after lower high. And from that move, the initial impulse move, so let me bring this up a little bit right here. So from this initial impulse move, that's your key range. This is your 50% target. This is your 75% target. And this is your 100% target. So this would be the major target right here. And if price hits that level and shows some sort of oomph, some sort of juice off that level, I think there's a good shot to go 2,100 back towards 6K. Now whether it goes through 6K or not, who knows? But I think if it hits 21, there's a good shot to get back toward 6K, which could be a huge move, right? Buying 21 or buying 2,000 to get it back to 6, not bad. But again, it has to show some juice, because if it does anything like it's done here lately where it doesn't have much juice, this thing could keep on crashing. So no love here for Bitcoin. It's just been getting destroyed. Now one thing to keep in mind is I love when you get a pivot like this, because now we know that if price can push and close beyond 4,400, we have a pretty decent return back up this LVN channel here, which could take us again back toward 5,500 to 6K. So that's the pivot to watch. The day it can hold above 44 would be significant, but if it can't do that right now, then we got to watch down here to see if we get some spring off the 2,100 level. So that's what we'll be looking for. Does it do that and bounce? Otherwise, Bitcoin looks sickly right now, big time. All right, let's take a look at some stocks here. We had some here that were requested. Boeing was one of them here. I have a bunch to go through as well, so we'll start going through some of these. Boeing, we saw this one the other day here, and this was basically the low right here, right? This is the low, and you saw this across many stocks. The major gap down, and then the huge snapback reaction rally. Anything below 310, you know, just was a major buy. And it even got just below 300 even, got into the 295s. That's a pretty solid move. You see how price held the 310s here and lifted off. This one's in a great trading range right here. And it's about fading the edges. And one thing I keep mentioning to the traders in our room is that whenever you see a market that's in distress right now and the wild swings and some stocks are down so much, some of the best stocks, Apple's way down here. What did it fall? 25% in 1 month? You know, when you had those strong stocks like that had been leaders this entire time, investors and those types of folks have a lot of times put a lot of their money into that one stock. Most of their cash in one stock or in a couple of stocks, and when they all get destroyed, it can be stressful, right? And so whenever you get a favorable pop like this back toward recent highs, it's a chance for a lot of folks to take some cash. So when you have a market that's seeing a lot of violent swings back and forth, anytime a market pops in this manner, it's usually an opportunity for someone to ring the register a little bit and take some off. So we're right at that zone right now in Boeing. Longer term, obviously, I've always loved defense stocks. It's just the nature of our economy, and this one is one that has enjoyed a major move lately, basically tripling from the $100 level and going straight into 390, so almost quadrupling into 400 since that time 3 years ago. So it makes perfect sense that we've gone completely sideways this year. And this can almost be a microcosm for the market right now, right? We've had a great uptrend over the last 3 years, or 2.5, then sideways. And this sideways is the digestion of that move, and eventually we may see a resolution to the upside yet again. If this cannot hold 295s, so what the day it fails to hold 300, 295 is the day that we likely start to come back, and there's a gap right there at about 215, 210 that may need to get filled. You can see how thin this profile is all in here. That makes me nervous for any stock when I see that, because that's ill-traded market action right there, and most times the market needs to go back and retrade that zone. And so I like this one for a longer term continuation up because of, anytime you're digesting a move at highs, consolidating after a trend up, it can be a reaccumulation phase. But after a move this significant and how significant this range is right here, it can tend to start looking distributive as well. And if it's a distribution range, then perhaps we could be looking at a pretty significant drop down below. I'm not one to say we're going to crash. It's got to show it to me, but up here would be the spot where bears are looking to short it for a shot at pounding 295, 290, because if they can get through that level, that's where you come back and start filling that gap around 215. So that's the longer term idea. I think right now this is a great trading range. It's still a fade the edges, which means you sell up here and you buy down here. And that's exactly what the market's done the last couple of rotations here. So I don't know if this is going to be much different on this go around. We could easily start to pull back a little bit here and fill the near term gap and start to work down a little bit. But getting below 320, we just hadn't seen that many times. So even if we pull back, I could see us bouncing right back up and staying in the range a little bit. So those are some longer term thoughts on Boeing. Here's Pfizer, PFE. This one has been very strong as well. A very good up move. It came out of a compression back here, which is very nice. And now you're seeing another breakout from this compression. Those are very, very bullish qualities right there out of this one. The fact that you're able to push through 45s here after compressing sideways. 2-month relationship here, neutral usually is bullish. Those qualities are very good. Now we are getting to prices that are pretty lofty compared to what we've seen before. And so when that happens, there could be a you can continue trending up until you're done, in which case perhaps there's some sort of rotation back toward where the breakout point would began. That would be somewhere between 37 and 36. So if there was some sort of significant rejection up here, then perhaps you could retrade back toward that 37 to 38 zone. I think the way it looks right now still looks bullish, and as long as price continues to hold that midpoint there, you know, this thing is good sideways to up moving forward. If it breaks 44s, that's when you can retest, you know, the other end of this range and still perhaps be bullish. So that one's not bad, looking very strong. What I do like about this one is after the sideways, it's broken up nicely, and you're seeing these moving averages come up to provide support again. So any pullback here again into this pivot range could be an opportunity to get it higher still. So very nice action out of that one. Here's Tesla. Tesla's near the upper end of the range here. This one's been tough lately because of the headline risk. The headline risk has been a lot for this one. This was one of my favorites to buy and sell. You know, buy, right? Sell, sell, each of those. But with the headline risk, it's been very tricky on this one. Having said that, if you just look at the key levels, 360 has been a very reliable key level. You can see right there, anytime it's gotten to it or above it, it hasn't lasted long. It's been perfect resistance here, right? And then if it got above it, then it was, you know, a trap. And we're there again. I hesitate to sell this one because Musk has a thing against the short sellers, and he likes to put it to them in his ways. He's very good at that. And so again, if this looks overextended in the near term, because this is the range is 250 or 240 up to about 370 to 390. So we may have a little bit more upside, but really anytime you get above 360, the days are numbered before it comes back down. It's just ripe for taking profits. And so again, if this thing cannot get above 360 soon, I think we have a pretty good shot to pull back some degree. And how far? You know, maybe back to 320 would be a quick move, right? Because you start coming back down toward, you know, recent key level support or something like that. So 360, if it fails to hold above 360, I think we return back to 320 and perhaps even as low as 290. And then from there, you know, it either bounces there or we have to go all the way down. So those are the major levels. We've had them marked 245, 290, and 360. Those are some of the biggest levels on the board. So again, I think this one may be a little overvalued here in the near term, but I've been impressed with how it's been able to hold the 250 level against some pretty significant headline risk from, you know, Elon Musk getting slapped on the wrist by the SEC and all kinds of other stuff, right? So I mean, it's smoking marijuana on YouTubes, getting smacked on the wrist by NASA for doing that. I mean, all the headline risk that comes along with this stock. But 360 and above seems to be a premium at this for this stock right now. All right, let's take a look here at CBOE. Now CBOE here has been this one. It surprised me with how strong it was last year. But this is you could put this on the fridge right there. Take a snapshot and put it on the fridge, because this is what it looks like when you have a market that just gets pump, and look at the slope and how, I mean, it's just so much that it's inevitable that something like that will happen. It's inevitable, and once that happens, it can get stuck for a long time. And then once that happens, it gets accumulated, and perhaps the next move comes about. So this has a really good rounded bottom quality that's developing right now. This pullback right here is showing a tail at the previous month's low, and that could be a buy opportunity again for a move higher. Above 115 would be really strong here. I mean, again, when you see this type of behavior, it could go sideways a lot longer than you think, but eventually it's building for an opportunity to go higher. So I like this one a lot because of the rounded characteristics here. I like this one because it's accumulating, but it might have more sideways to go before it really starts to see some action. But I do like this as a bullish candidate because of its accumulating here and all that. So again, anytime you see a parabolic type of move like that, it's almost inevitable that it will drop really quickly like this and then go sideways for a while, and then that allows for some accumulation and then, you know, perhaps some strength down the road. So what could happen here is after this accumulation, perhaps this could fuel a retest of this high, and then that might be the best selling opportunity at 140, at least on a short-term basis. So good candidates there. Thanks for bringing those up. I have some I want to share as well. Let's take a look at this. I got some great candidates here, short-term, long-term. Number one, I wanted to talk about ITB and the entire industry group for housing right now. Stocks, they look good. This looks like what you would want it to be like if you were about to see a change of trend and a continuation to the upside. We've seen some significant selling pressure here in the housing stocks. I have not liked them all year. I thought here, finally, I thought that we might be on the cusp of seeing a move, and it just didn't go. It failed, and stops came out. And now we're holding at 30 bucks a share. And at 30 bucks a share, that's a great market structure level for this stock or this ETF in general. This is ITB. And you can see right here 30 bucks, right? And so when we bounce to 30 bucks after this drop, I mentioned that that's a great area to watch for a bounce. The retest was also a great spot, and it's clearly holding 30 after it dropped, you know, 50% down to that zone. Now, what I really like about this is the change of bias I'm seeing based off of the pivot range and the previous month's close. So you can see right here, this is the pivot range, and then this is the December pivot range. That's November. This is December. This is lower, overlapping lower. If you read my book, again, that's the overlapping lower situation. So that would suggest weakness. However, I mentioned it's a change of bias because the close price of last month's action was above or is above this month's pivot range. That's what I call a lower value with a change of bias, and that would suggest that we are about to go higher. And so this one is on the cusp of seeing perhaps a breakout that could lead this back to 35, 36, something like that over the next 1 to 2 weeks. So if this can get a breakout to the upside, we could be looking at a nice follow through. Now you can look at any single one of these housing stocks and you're going to see the same type of pattern. ITB, I got into this one. I bought 32 calls. Again, if price cannot hold 32 for any reason, I'm out. Because then you're going to see, actually I'll probably buy 32 puts at that point. 32 is basically today's low. And what I'm betting is if this is the low, then we're going to start to see expansion to the upside to this target, and we can grab a quick move over the next 1 to 2 weeks. If there's a failure to hold 32s, then we're going to come right back down and retest the low perhaps. So this is not one where you want to hold on to it. If the 32 calls don't work, because tomorrow it closes below 32, then the trade's off. But as long as it holds above that level, I want to hold it for a couple of weeks here for this thing to attempt to make a move. So that's ITB. Now if you look at something like Toll Brothers, you'll see you have the same type of trade, right? It's been trending down all these months. Trending down, 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 down. And then you have an inside value with a change of bias. Price opens above and comes into the range and pops back out. That's bullish. Additionally, what you see here is a failed new low. Failed new low. So it starts the failed new low trade sequence. So for those of you that have my newest course, Swing Trade Pro 2.0, this is a failed new low after some compression. And it's one of my favorite trade ideas because it can be very explosive if it can get that breakout. Any failure to hold the midpoint negates that trade, and it's done. So if it can't hold 32.80 for any reason here on a closing basis, it can drop below it tomorrow and then pop back above, but on the closing basis, the trade's off. But if it can hold above that zone, we have a potential change of bias that can lead to a big pop up. And value is still above at 36.30. Based off of my my target approach here, this low would suggest that this is your high probability target range for the month, and that would be between 35 and 36.30, and that is based on average monthly range over the last 10 months. So based on average price action over the last 10 months, from this low we would normally get to that target zone by the end of the month, usually within a couple of weeks. So again, Toll Brothers looking good. If you look at something like PHM, this is another one. This is the most bullish right now of the home builders, because many of the home builders look like what we just looked at, where they're still here in this range and we're about right here ready for a breakout. Whereas Pulte is already above and already holding market structure and could be headed even higher. You can also see here that this one is pulled back right here into the PIMA trigger zone. You can see the crossover happening, the change of bias on the PIMAs. You see the higher value relationship now. After months of lower value relationships, we finally have a higher value. So what would happen is anytime you drop into the pivot range to begin the month, that's the area, typically speaking, best to buy for a continuation higher over the next couple of weeks. Again, any failure to hold above this midpoint by the end of a day over the next 1 to 3 days would negate that trade and actually spark perhaps a stop run back down. So I always have to mention where the out is, right? But I do think that this has a great potential to reach 28 to 29 over the next 5 to 10 days. So again, home builders looking really good right now. Any of these home builder stocks are looking great. There's XHB also is the other home builder ETF. You can see this one opened above that range and showing the same type of characteristics. Again, can this one continue higher out of that range? If so, 37.50 to 38.25 could be the next target above. So home builders looking really good right now with regards to change of bias, compression, failed new lows, and pulling back to PIMA zone. So not bad. I took one of these with ITB, and I could add more tomorrow as well. I wanted to also talk about Clorox. This is again when the market gets volatile and starts to turn bearish even, you typically see market participants go toward defense type stocks like Clorox here. Everybody has to buy these types of products, even if it's, you know, a recession. You know, you got to buy those types of products. And so you can see definitely this one has shown strength ever since the market got weak in October. This one has been on the way up. This is one of my favorite buy opportunities. When you see this 8-period average, it's golden because it's the most important in my opinion. 8-period is such a strong average. And then this is the 21, 34, 55, and again this is the 8. And so whenever they're stacked and sloped, they're all sloping like this, they're all stacked accordingly, that's a trend. And whenever price pushes into or drops into that trigger zone, that's the best spot for bulls to defend. And if price is rejected like it did today, it could be a continuation here. It's one of my best buys. It's a PIMA pullback is what I call that setup, and it's one of the easiest setups. The entry is tomorrow between 163.50 and 164. If price drops into that zone and shows some strength, it could be a buy into 171 to about 175. So that's the target zone above. So again, you see these green lines? That marks the month's low, that green line. These two mark the 75% and the 100% targets on average based off of the last 10 months. So on average from this low, the market will go to that level over the last 10 months. That's been the average range for this stock. So we don't even have to go all the way to make money, right? If it just gets here, we're good. Usually it gets somewhere inside that zone on most cases. So Clorox, I think looks like it could be a pretty decent buy for another round of strength. It is rather expensive, and that's why I'll be watching tomorrow to see if I can get something a little cheaper. For example, the 165 to 170 call spread could be a great way to go, and because again, this is a rather expensive options on this one, so call spread may be the best way to go, or even a call credit spread. So that's a good opportunity there. AMD, this is one we looked at today at the end of the session. Huge gap up, and as a matter of fact, the reason I bring this one up also is because if I erase this right here and you don't see it, this is what home builders look like right now. You know, we're right here on these home builders, ITB, Toll Brothers, HXB, any of the other ones, right? They all look like this right now, with the potential to push up and start to run. And today, AMD just did just that. So it gave us this Friday. It gaps out of range in value today and closes strong. It closed outside the third standard deviation above VWAP today based on my proprietary calculations, and that's very strong. Now, to hold above 23s tomorrow would be significant. Pulling back to 23 but bouncing would be significant, and a continuation toward 26.60 to 28 could be ahead. And again, anytime you gap out of range in value like that and you're seeing a change of bias, that's your pivot range. You have a lower pivot range, but the close was above it. That's a change of bias that suggests that we're going to go higher. It did just that. Any pullback could be bought here now for a continuation. So AMD is looking good as well. Let's see. We also have, let's go with WTI. This was a buy candidate from Friday. Up 8.6% today because it's a cheaper stock, but up big today. What I liked about this candidate is that major support at 550. So this is a cheap stock, but major support at 550. It took out the recent pivot low. The last time it was this low, it rallied nearly to 10. I mean, that's almost a double. Failed new low. So failed new low again from my newest course, Swing Trade Pro 2.0, the failed new low trade sequence in play on this one, and a nice gap up already, holding above range, closing near highs. Even though we have a lower value relationship here, if price can continue to hold $6, we could be looking at a return all the way back to $9 to $10 for this one. And it may not be a quick move, it could be a 2-month type of move, right? So it could take a little while to get there. I mean, if you look at this over here, that was beginning of August to about the beginning of October, so that was about 7 weeks on that one. I would say this would be about the same thing, right? By the end of January, where are we? Again, if we can hold $6, I think by the end of January we could be somewhere over here. So that's one that has kind of a longer term position type of feel to it. That was a long from Friday. Another one here. This one I have not liked for a while. I don't think anybody has, Micron, especially fund managers. But it looks like it's starting to turn the corner. It's starting to turn the corner. So if you look over here, these are major lows that we're seeing before it rallied to these highs. That's the $38 level. After it spectacularly fell from those highs and sealed them off and took them out, these lows, it's now consolidated right around that area. And again, if you look at the close-in range right now, it has a lot of the qualities that we see in AMD and in the home builders, the same type of pattern where we have lower value relationship, a close above, which would suggest a change of bias, a gap out of range in value, and a hold of those gains. Again, I would be cautious with this one because it's been beaten up pretty good. There's some big money that's underwater, but downtrending market could be changing this month. And if that happens, 47 to 49 could be in play. $50 is the next key level above, and that could be a solid bounce to end the year. So that's going to be one to watch as long as it can hold 37.50 I think this has a shot to go, but I hesitate to say it on this one because it's been so bad. But the way it looks right now, it really looks like it's trying to change course and push higher. So the change of bias looks like it's starting to do its thing in this one. ASML looks very similar as well. I was looking at this one because, again, this one's another one that's been trending downward. A very strong start to the month. Can this one get above 180? We have a change of bias. And again, usually, even if this were to pull back into the pivot range, in most cases you start to see it go higher. Not my favorite of some of the ones we've seen here, but you get the point of the change of bias that could be starting to happen in some of these charts. IYT, I wanted to show IYT. This is a great one that we've been using to help us forecast what might happen. It's kind of a leading indicator of sorts, right? The transportation average. Transports kind of highlight a little bit earlier what might be happening. And this one, again, this was one of the ones that were very significant when the initial sell-off occurred in October 1st and right around that zone when we were saying the market could drop. This is the one I sold. I bought puts in that one right here on this day and took profits on the major drop and then took the rest on this day on accident. I meant to leave some on, and I guess I got too excited and took profits on all of it. I meant to hold the rest for a move down here, but it did really well, right? And then once it got to this low, which is basically kind of like taking out the lows of the year in the market, it took it out briefly 2 days and shot back up. Then it inverted head and shouldered and shot back up. That's very strong. But now you're seeing a resistance at 200 again. So if this one's a leading indicator to the market and we're seeing resistance near the top end of the range right now, does this suggest that we're about to see a little bit more of a pullback ahead for the broader market? Because I could see this one dropping to about 189.5, which would be the midpoint of last month's range. 189.5 or thereabouts would be a really solid target from where we currently are. And so I would keep an eye on 197s tomorrow. If price pushes into 197s and becomes resistance, any breakthrough 195 could be a big time move into about 189 on a swing basis. And then perhaps it could be bought for a year-end rally even from there. So this one is one that if you were looking, if you're thinking the market's going to drop, this is a good candidate here to watch for a push downward. 200 puts could be the in the money idea. You know, the 195 puts could be the at the money or slightly above the money idea. And so again, this one has the potential to drop back toward 192 and 189 if it can't get above 197s. Another sell candidate that could be in the works here, short-term sell candidate, is GoDaddy. I like this one longer term. I really like this one longer term. I like it off the 57 halves. That's a great bounce level right there. It bounced really nicely off that zone. But what's happened now is we came back into prior support and are showing some initial signs of weakness. So you can see right here we have a clear downtrending market, clear downtrending channel. Here's prior support. Right here, it took it offered and now retesting from below. In most cases, price would drop back down toward 57.5 and retest, and perhaps just trade in this range for a moment based on market structure. If it can get above 68 or better yet 69s, that's when we have a shot to rally as high as 80, I would say, over the next several weeks. So this one is at a major inflection point in the charts. Once the 68 level is big and we failed to hold above today's midpoint, dropping back down a little bit, I would watch this one very carefully. Again, if you wanted some short exposure, this would be one here that could be on its way back down, at least by some degree, right? It doesn't have to go all the way back to here, but it certainly could and still remain longer term bullish. So this is one to watch on the short list. I also wanted to talk about some longer term candidates here, and I'll wrap it up for y'all. I don't want to hold you too long, but we have some great ones here that we've been watching. I'm going to move my VT over for a moment. A lot of strength in the market today, some red obviously, but some of the things that I'm seeing from a longer term perspective, for example, INCY. I have been watching this one and waiting for it to break. This is about as strong a compression as you'll find. It's gone sideways since April. After it had a major gap down, you can see I have some alerts on it right now. You see all these crazy squiggly lines on here? That's basically my PivotBoss bands. Basically, you have VWAP right here, and this is 6-month VWAP right now, or 5-month. It started in July, so 1, 2, 3, 4, 5, and then it's starting the 6th. It's flat. VWAP is flat. The other thing you see, this is R1, so 1 standard deviation above VWAP, 1 standard deviation below. That's 2 standards and 3 standards, right? 2 and 3. One thing you'll notice here is that because of the compression that we've seen, it's normalized now, and now R3 is here, R3, R2, R1. Over here you have S1, S2, S3, and now that is your range. I call that a pinching phase. Whenever it pinches that significantly, a breakout may be imminent. Here's the problem. Whenever you have compression of that significance, it says nothing about directional conviction. It just tells you a breakout could be coming, but you don't know which way. It's up to us to understand what direction we think it might be headed. Anytime you have a significant move like this, let's look at the weekly chart, where price has dropped to major support and is held for a long time. I'm of the opinion that it's going to rally. It's holding way down here after the significant drop. This is major accumulation, and I think it's likely due for some sort of significant rally. How far does it go? How far does it go? I don't know. But I think that based off of 60, and this is what I've been telling our traders for months, 60 can double to 120. I think 60 can double to 120. We obviously only hit 60 once here lately on the major drop. Actually got a little bit lower than that. What's the low here? 58.33. But I think this one is accumulating in a way that's going to release some significant energy. And if you want a reference point for this, you kind of go back here to this time frame here where it accumulated sideways around 40 to 50, and look at the breakout that ensued up to about 130. Over here, compression, compression, compression around 20 to 25. The breakout took it to 70. Those are the same type of compressions that we're seeing on the right side of the chart here. And I believe it could be the same type of breakout that could be seen. So again, I've been watching this one a long time, and it's finally at a spot where the bands are compressing, and so that would suggest that we're closer than we have been before. So again, this one could be a major breakout candidate. It could be a good long-term straddle play. It could be a directional conviction play to the upside. Who knows, whatever you like to do. But above 75 has a great shot to open this thing up. And at the very least, I think you can get a gap fill at about 83, 82.5. At the very least. But this is a long-term opportunity that over the next year could be very, very bullish. So again, I wanted to provide some shorter-term ideas, some longer-term ideas, some medium-term ideas. This is one of my longer-term ideas. Another one is PayPal. If you look at PayPal here, you can see how this one's compressing as well. Now this one doesn't look as good a compression as the last one we just saw. Here, let me bring this a little bit bigger. There you go. But what you'll notice here is after the major rally that we've seen in PayPal, which took it from 45 to 90, so it doubled it, you're now seeing compression of the bands as well. Compression, compression. They've renormalized, and now they're thinner. You also see right here that we have sideways VWAP. And the last time it got undervalued significantly was below the S3 there, so 3 standard below value, and it bounced tremendously back up. So it went basically from 75s back to about 89. Huge move already. I think this has a bigger breakout move coming down the road. And I also think that this is in the right spot. I have it in merchant services along with MasterCard, Visa, Square, and some of these others, ePay. And speaking of Square, it's one of my favorites as well from a long-term perspective. I've liked this one all the last 2 years. It's been great. This one, I've been looking for a floor in it, and I think we found it. The floor I had is 65s. And again, it actually got through that, got to almost 55 there. I guess the low was 55.37, and now today trading 72. Now that's been a huge move. This 65 right here is a key level, a very nice key level. And so I would say if price were to pull back to 65, it's going to be hard to beat that price, because I think you have a great move coming off that level. So 65 could be a great opportunity to watch this one from a longer term perspective. I like Square as a longer term investment idea as well as a, you know, kind of a swing idea. But Square is one that down the road, if you're holding this, look at the weekly chart here. If you're holding this for the longer term, 65 could get you 130. So that's what we're looking at here over the course of the next year to 2 years. Can it get there? And I think it can. So I like this one a lot as a longer term idea, and they continue to do great things. One thing I like about this one, if we're going to talk kind of financials with it, is that they really haven't even really broken into much of the international market at all. They've done a great job here getting up and running so fast. A lot of my business owner friends use them for their storefronts. I mean, it's just so much easier and better than a lot of what's been there before. And as soon as they start breaking into the international market, I think that's where you start to see that multiple rise and this thing goes. So I like this one as a longer term candidate as well. Another one is Twitter. Again, I hadn't been a huge fan of Twitter, especially at these prices. My best recommendation was at $13.91 when it was down here, basically 14 bucks. But other than that, I mean, I hadn't liked it at these prices a whole lot. As a matter of fact, the last time I mentioned anything on this one was on this day, and it was my short. You know, that was the day I said this is the top for the near term, and we're likely headed to 26. And we got to 30 and not to 26. And right about here is when I finally thought, you know what, I guess we're not getting to 26 anymore. This was the longest, you know, it took so long to go down. I mean, yes, it you know, from this high it did work, but I thought it would be a quicker move to fill a gap and get to 26s, and it didn't do that. And instead what has happened is it appears 30 bucks is being accumulated. If you look at the chart a little better here, you can see the pinching of the bands, which suggests that this is compressing some more and perhaps ready for a breakout. You see a rounded bottom behavior, or perhaps an inverted head and shoulder type of pattern. That kind of compression would lean up, and I think that this could have a chance to really rally down the road. The way that 30 is being defended, that level, if it continues to hold, I think has a good shot to come up here and get a gap fill back toward 43s, and maybe even stretch it beyond that price. So this one again showing some signs that perhaps a longer term breakout move could be ahead. And if it were to break to the upside, filling the gap and testing those highs would take it, you know, somewhere between 43 on the gap fill and up to about 48 to 50 to take out those highs. So that's another one here to watch for a longer term breakout move. It's coiling up, and it's looking like it's on the cusp, on the verge. Now, one of the ones I've had as a long candidate during this really bearish period here that we've seen is UNH, but it hadn't had much of a pullback at all, and you can see it's on highs. It has done so well during this kind of volatile part of the market over the last couple of months. But one of them here is Humana as well. And this one, again, compression here. You can see a failed new low today. And another one that has done fairly well in the face of some pretty bearish action. It did drop pretty hard here. Some big time trap up there and drop. But upon taking out the lows, everything still looks great. This one looks like it's poised for more upside as well. Healthcare stocks, again, holding pretty well in the face of a bearish market here. And the way that this one is looking right now, with the failed new low, rejecting value after popping back above, compression of the bands tells me that we could be approaching prior highs again, perhaps reaching 360. And if it did that, it's probably going to continue to climb beyond that. So this one's looking pretty good from a longer term perspective as well. So some pretty good candidates there to watch. Some of the ones that we've recently taken profits on are Home Depot. I took half off today on this one on the pop-up this morning, but I'm still holding half for 88 to 90. I think it has a good shot to reach these prior highs or perhaps grab value. This is a seasonality play, so basically over the last 35 plus years, the last 6 weeks of the year, the last 7 weeks of the year are usually up in terms of seasonality for this stock. Whether you look at the 1 year, 3 year, 5 year, 10 year, 20 year look back, it doesn't matter. When you look at November, December, this stock is usually up quite a bit. And so again, taking half off here today just because of the favorable pop higher, but still holding half that trade for a continuation. And again, another one, McDonald's was another one here that we've gotten into, and took profits on that one above at 190. It hit our target. Nice little continuation up. Another pullback here into the trigger zone. You can see how R3 is trending up. That is indicative, obviously, of a price discovery phase, and it will likely continue to trend up until proven otherwise. This is another one that, again, when the market starts to act a little more bearish or more volatile than usual, the smart money usually goes to something a little more defensive, and like McDonald's here, and this stock doing quite well. So on this pullback here, we could see another 1 to 5 day move higher that takes us into 192 to 195. So took half of that off a couple of days ago, looking to take the rest off on the next pop higher on that one as well. Those are a few of the candidates here that we've seen here lately. Another one, I'll leave you with this one. Look at this. Tesoro today gapping up to 73.5, up 58.5% today because of the GlaxoSmithKline acquisition. Today was Mergers and Acquisitions Monday. This is one that we had Wednesday as a buy candidate, not because of this news, but because of the change of bias that we were seeing in the trend, because of the strong rejection and move here and holding those gains. 3 days later, up 58%. That's a huge move. But again, the change of bias was huge in this one. But what a move on that one. So some good candidates here. ITB, Clorox, AMD, looking at any of those home builder stocks, some of those INCY with the breakout potential, even some short candidates with IYT and GoDaddy. So a lot there to watch here over the next few weeks. I do think if the markets can hold, we're at a very critical point here tomorrow. If the markets can hold above to the midpoint tomorrow, this could be pretty significant heading into the end of the year as a relief, but then you have to be a little cautious heading into January. If there's a failure to hold 27.75 tomorrow, 27.70, then we may be looking at a push into the pivot range that could still be a buying opportunity. So it's going to be very interesting to see how these play out heading into the last month of trading. I want to say thank you all very much for hanging out with me today for the monthly market outlook for December. I will have the recording out for you all to replay, and we will see how some of these candidates turn out heading into the rest of the year. Thanks a lot for hanging out. Have a fantastic rest of your day, and I will see you all soon. Take care.